Hi, everybody. This is Gary Dean with Sentiment Timing, and this is our technical video report for Tuesday, August 22nd, 2023. So we had the Bears stepped in right where they should have, exactly like I put in the morning notes, where I said if you're, if you want to take it, start layering in on the short side. I said you want to look at right around that 44.20 to take a quarter piece, and that's exactly where we went to. And from there, sellers stepped in. So what's happening right now after this just abnormal move, which I'm still scratching my head on why they decided to do this. But in any case, this is where the model got knocked off for a couple months. It's been right for 2 years. So, as much as it was a pain trade, we're back to where we should be on this. So it's not that bad. And we already closed half right at the lows. And if you took this short here, I didn't. It was not a trade alert. I still believe we're coming up to the 44.50, but this trade is working right now. You're up 33 points in one day. If you're trading the ETFs or options, getting a 3 point move intraday, or let's say you're just trading options on the SPY, getting a $3 move, that's a lot of money, man. If you buy 10 contracts, you're making a few $1,000s on that. Now, I'm not saying those are the trades that have come through all the time, but I mean, that one just worked out exactly where it was. It moved right where the Bears stepped in, and the Bulls stepped in right where they should have stepped in. So things are starting to move in the right direction, and that's why I'm believing that we're going to be back to doing the 100 point S&P moves every 2, 3, 4 days, and just banking some really good coin because the VIX or the volatility is here. It's not going to go anywhere. I don't care how many people are hoping and praying that this is the start of a new bull market. I think anybody is looking out long term right now is really, really they're walking on thin ice because long term outlook is there's so many different variables that can happen to send the market higher or lower. So you don't look at the long term. You take the short term. I'm at the one long term that I'll insist on, and if you haven't gotten the gold report that I put out, you really should. Gold is going to be that's where you want to be in the next let's say 1 to 2 years. I see it screaming higher, and it's going to be a lot higher than where it is, and it's really for the geopolitical reasons. The odds of World War III starting are increasing on a daily basis, and that is when money flies to gold, and that's why gold is going to fly higher. So that's one that I am bullish on. The three stocks that I put in that I like, they're doing exactly as they said. I said I would not be buying them when I put that report out. I'd wait for them to come down, and every one of them has come down. Same with the GLD, and this is your buying opportunity. So the pivots are all there, and that is not a trading thing. That's something that I'm building a position to hold on to for a couple of years, and I'm looking for a 300% gain, maybe 200. But in any case, they're going to be good gains on it. So if you haven't got it, I would purchase it. It's a for members. The report we put out, you actually you have seen that already. So it's really if you haven't picked up the gold report, that's where you would be interested in it. But anyway, so right now the way I'm looking at this is it's probably easier on a 15-minute chart. So this right here at the lows, right where we closed them, we had an ABC, went right into the resistance where I thought it was. That was the short side, and now it looks like we're doing an ABC move down. And once it finds the low, which I believe it will, whether it's down to here at the 43.61, or even maybe we come down a little bit more, but whatever it is, I'm looking at this pattern as an ABC, and then we're going to make an ABC of a B, and then the same thing, an ABC to the top. And what that is, what it's was suggesting is that this is not an impulsive move. It's something that you want to fade, meaning that if it gets up here, you want to be looking to short. Now, it's the same thing if we were, if we were heading down and we were seeing these ABC moves. You don't want to be, shorting those. You want to be looking to buy the dips. And right now, this is really setting up where whether this was the top or not. I'm not married to the S&P having to go up here. being in this market for too long, I'm not going to tell you it's too many years, but in any case, you get a feel for what's going on, and it seems like the feel part is getting a lot easier lately, and it could be just because the people that are in charge, that are taking over these big positions, they're not really knowledgeable in the market. Half of them have just been around since you know we have started cutting rates and had rates at 0%. So they don't know what, as far as like charting wise and seeing what's going on. They're not there, and they're getting easier to predict over and over. Just like when we were making this move, it went against everything that I was looking for, but I just knew everything they were throwing out was just smoke and mirrors on this, and this was not holding up here. So anyway, let's get back. I'm sorry for getting off track on this. So my preferred pattern is A, B, and we're going to make a wave C up to the 44.60 level. That's where I'll be getting aggressively on the short side. And being we covered at 135, you can see we saved ourselves a lot of stress on this. And then when it comes back down, that's when we start closing everything, because we're going to start looking for when Woody's putting out the next low date. And we're going to have everybody's going to be bearish on the market, just like everybody was bullish on the market up here. And it's going to be a great buying opportunity for another pop higher. So things are lining up. They're getting, a lot easier to see. Like I said, I don't like these confusion trades that don't make any sense. With these are making perfect sense. Where the support is holding, resistance is holding. They're making the bounces when they should. So things are lining up. So again, final thing right here, I would say the Bears, the Bulls, they have to hold this 43.60 level here. If they don't, then we could be getting in a little bit of trouble. But I think it's going to hold. So if you're looking for the long side, you'd be looking, somewhere around that 43.60, and you'd be looking to exit right around that 44.50. So that we don't have any sell signals, we don't have any buy signals. It's just stay open minded right now, but know that bigger moves are coming in the not so distant future. So with that, have a great night, and I'll talk to you guys in the morning.